we're going to go ahead and officially get started here. So welcome to everybody who's joining this webinar today. This is a webinar that we are putting on in conjunction with Crowdcreate. I'm Jimmy Atkinson from OZ Pros, and my co-presenter here today will be Ashley Tison, and then we'll bring on Jeffrey Maganis from Crowdcreate to share a lot of interesting strategies with all you folks out there today on how to start an opportunity zone fund for your deal and raise capital, find investors for that deal. And we have a lot of people on the call today. We had several hundred people register from 45 states all across the country. And I think we've even got a couple of people outside of the United States. I know we've got a couple of people joining us today from Puerto Rico as well. So really excited with the numbers that we have in the room today and really excited to get going. Before we do get going officially, just a little bit of housekeeping. A couple of items. One, we are going to have time for a Q&A session at the end of today's webinar. So if you have any questions, you can use the chat feature, which I see a lot of you are already using, but there's also a Q&A icon on your Zoom menu that you can use as well, and that'll help me organize the questions a little bit better. I'll be organizing the questions to pose to you, Jeffrey, and you as well, Ashley, toward the end of the webinar today. One other note is that this webinar is being recorded and will be shared with our audiences on YouTube and through Zoom. And I may even turn it into a future episode of the Opportunity Zones podcast as well. So we'll get going today. Just a little bit more background on our presenters. Again, I'm Jimmy Atkinson, co-founder of OZ Pros. I'm also the founder of the Opportunity Zones database at opportunitydb.com and host of the Opportunity Zones podcast. And I know many of you attending today may have found out about this from my weekly email newsletter at opportunitydb.com. Ashley Tison will also be joining us. He's my co-founder at OZ Pros. He's a business attorney based in Charlotte, North Carolina, and he has extensive real estate investing experience and a lot of opportunity zone consulting experience as well. And to date, I believe he's set up in excess of 60 different opportunity zone entities. Is that right, Ashley?
I actually think it's over 100 now as I was looking back through. So I think we've broken that 100 mark, which is
over
kind of
100.
fun.
That's incredible. So a lot of experience there with getting a lot of different opportunity zone entities, funds, and operating businesses set up. And then new to the group today is Jeffrey Maganis. He's an individual out of Southern California, co-founder of Crowdcreate. His firm has helped raise over $130 million for more than 80 different projects over the last few years. So really excited to get his thoughts on finding investors and helping to market your deals. Our agenda today, and this is going to be for the first half of the call primarily, will feature Ashley, and he's going to walk you through the legal ramifications of structuring your opportunity zone deals. And first of all, you should know that many of you do already know this, but for those who may be new to the game, every opportunity zone deal needs a fund. All of the equity needs to flow not straight to the deal, but through what is referred to as a qualified opportunity fund. It's the fundraising wrapper that has to go around the fund in order to qualify for the tax benefits. So we'll be talking a little bit about that and how to structure it and why it's important to choose the right structuring. We'll go through an overview of the opportunity zones benefit, basically just opportunity zones 101. For those who may be newer to the program, for a lot of you, this will be review, so we'll try to keep it brief. But mainly, we're also going to emphasize why it's crucial that you educate your investors about the opportunity zone deal in your pitch book and on all your other marketing material. We'll go through general fund and qualified opportunity zone business structure, documentation to start a QOF and QOZB, what's required, how do we actually turn the thing on, and then toward the end of Ashley's part of the presentation, he'll speak a little bit about capital raising and securities laws requirements, and then we'll turn it over to Jeff, who will speak in more detail about actually how to go about setting up your website and doing investor outreach and raising capital. So Ashley, take it away, and I'll keep going on the slides here for you.
All right, so thanks, Jimmy. Thanks everybody for attending today. Very excited to actually have the ability to be able to get this program out to as many people as possible. That's part of our commitment to sophisticated simplification, and try that saying that 3 times fast. But as part of, and what Jimmy said, when you are out raising money, you are dealing basically with your investors' crock brain, right? And they are looking for ways to shut it down and to say no to the deal. And so part of your strategy needs to be, okay, how can I eliminate those objections, and how can I get them as comfortable with this deal as possible? And that's difficult to do with a normal deal, but opportunity zones lay in this added extra layer of complexity to it that most people's brains just kind of shut off. And I think that that's been one of the phenomenon that have happened as a result of the PR, is that people are like, opportunity zones, everybody's talking about them, but nobody's doing them. And, that kind of adage. And so one of the goals that we're trying to accomplish within this is to give you some ammunition so that you can have a base conversation with people and very easily explain to them where are the qualified opportunity zones, what they are, and what the benefits are. And that is definitely going to be something that you need to do in your pitch materials that you're sending out to your investors. So where are they? They're all across the United States and in the territories. What are they? There are 8,700 census tracts that were designated by the governors, up to 25% of their low-income census tracts, which were designated to receive money and provide a tax incentive to the investors for investing into that area. And so as you can see from this map, right, there's little dots and then there's bigger splotches as you kind of head out into the west, into more of the rural areas. And the reason for that is that it's based on a census tract. A census tract is a certain amount of people. And obviously in an urban area, that's going to be a lot more dense than it is in a rural area. So in rural areas, you're going to have maybe even sometimes entire counties that are all opportunity zone. That's certainly the case in Hyde County out in eastern North Carolina. Next slide, Jimmy. All right, so what is an opportunity zone, right? And this slide that we have right here is what we put into a lot of our pitch decks. And so whether you put in this one or whether you put in something similar to it, you're going to want something that communicates what it is and the basics of it and be able to talk about that, right? So I kind of gave you the highlight. What is an opportunity zone? What is an opportunity fund? Well, part of the Tax Cut and Jobs Act was that you have to make an investment through a qualified opportunity fund, which then becomes the chassis for how you do your opportunity zone deal. And an opportunity fund can either be a partnership or a corporation that's specifically organized for investing into opportunity zone deals. And it can be an existing entity. It's a little bit trickier with an existing entity, but effectively what it just needs to have is it needs to have bylaws or governing documents that say that that's what it's going to do. What type of investments can be made? This is important as well, is that it's got to be equity, right? So you have to have equity that's coming into your deal. You can have debt that sides along with it, right? That comes along beside your equity, but ultimately it's got to be equity into a QOF and ultimately an opportunity zone business. Once again, it has to be a trade or business. It can't be a passive investment. And so that'll be one of the things that you got to shy away from too. Triple net leases, not so much inside of an opportunity zone deal. You want to make sure that you are actually conducting a trade or business inside of your QOZB, QOF combination. Next slide, Jimmy. All right, the three benefits, and everybody should be able to spit these out off the top of their head. The first is a temporary deferral. So if you roll your money within 180 days of the gain or 180 days of the tax filing deadline for a partnership or an S corporation, you get to defer those gains until December 31st of 2026. So effectively that means that you get an interest-free loan from the government to make an investment into an opportunity zone deal that doesn't come to be paid back until April of 2027. So that's perhaps one of the bigger things that people aren't concentrating on is the time value of money of playing with the government's cash. The second benefit is that if you get your money in before December 31st of 2021, you get a step up in basis of 10%. So effectively what that means is that on your original investment, you're going to get a 10% tax reduction when you go to pay the taxes in 2027. It's also going to give you a 10% step up in basis in your new qualified opportunity fund because you start with a zero basis because they're holding your basis out at your original investment. The third and the most important, right? So the big, effectively the brain of this Mickey Mouse is your permanent exclusion. So after a 10-year hold at the QOF level, you get to get a step up in basis to fair market value on all of the assets held by the QOF. And as I was talking to Jimmy, you know, as we were kind of bantering back and forth before this thing got started, is that is really significant, because effectively what it allows you to do is to be able to sell anything after a 10-year hold and get that tax benefit. So this is really important for getting your QOF set up, going ahead and getting it aged right now. And then it also plays into a strategy about how you want to time your QOF and time the strategy of your investments going into your QOF. So Jimmy, next slide. All right, so this is something, and whether you've used a slide like this or your own slide or whatever, you at least need to be able to talk about this, right? So on $1 million investment, and so this investment is assuming that you had $1 million capital gains. Let's say you bought Amazon for $1 and it's now worth $1.1 million, and you sold it on May 1st of 2020. You set up your QOF on May 2nd and you get your money into that, right? You're going to be able to invest $1 million instead of $762,000, because you would normally be paying $238,000 in 2021. But instead, you get to defer those taxes, invest the government's money, and so you are effectively earning interest in your opportunity zone investment via your $1 million as opposed to the 762. If you get it in by December 31st of 2021, you'll be eligible for a 5-year hold. So if you've held your investment for 5 years, by the time that December 31st, 2026 deadline rolls around, you will get a 10% reduction in the capital gains taxes. So that's a savings of $23,800 right there. When you go to pay the taxes, effectively in April of 2017, you're going to pay $214,000 instead of $238,000. And then after a 10-year hold at the QOF level, assuming that you sold this, right, assuming that you sold your exit and you exited it at the 10-year mark, you're going to net $1.7 million, right, $1.785 million, as opposed to if you had just invested this into a normal non-opportunity zone deal, which were after you pay taxes would be a $1.1 million payout. So the net benefit on that, the ultimate benefit, is 53.8% difference, right? And that's just going to increase if your deal is making more than a 2x return. So this deal that we've modeled right here assumes a 2x return. So if you have a higher than 2x return, which hopefully you do, you're going to even be juicing your investors more than that 53.8% differential. Go ahead, Jimmy. All right, so part of what you need to be able to communicate to your investors, we talked about this, right? Making it as succinct and kind of visually stimulating as possible. You're going to need a dialed in pro forma as part of your pitch deck. So you're going to need these numbers to be factoring in the opportunity zone investment and be able to show what your investors are ultimately going to get. And it's kind of tough to actually model that on the back end benefit, because you're basically trying to prove a negative because they're not paying taxes. And so you don't really want to model it where you show them paying taxes, because then they're going to get confused. But you can effectively talk them through that when you're having a conversation to say, this benefit to you, in this case, it's a 5.5 profit multiplier with almost a 20% return that, you know, you're going to be taking that and putting it in your pocket tax-free. Next slide, Jimmy. Oop, let's go back. So another kind of crucial piece to get to your investor's croc brain, right? To get to that, to get away from the no and into the yes, is you want to put the information that they need to see into an executive summary that walks and talks. And so it doesn't have to be exactly like this. Quite frankly, we probably have a little bit too much information over in that highlight. Probably should even be taken down a little bit of that, because you want to show them how much you're raising, what they're going to get, and what they're going to get in return. So how much money they're going to make on the backside of the deal. And you want to show them what kind of deal they're doing, right? What your strategy is. And then you want to show them the partners that you're partnering with in order to make this deal legit and to get them comfortable. Go ahead, Jimmy. So this is a typical fund structure org chart. So this is kind of the anatomy of an Oz deal, right? You got an eligible taxpayer. That taxpayer has to drop their money into a QOF. And then at the QOF level, you can do a deal at the QOF level. But if you do, you're a little bit more hamstrung. So you've got a 90% asset test twice a year. And so 90% of your assets have to be qualified opportunity zone property. And you cannot have more than 5% non-qualified financial property. So what that means is if you're doing a deal at the QOF level, you need to make sure that you can spend the money that you got into the bank account every 6 months, right? So that way you don't have too much cash sitting in there that's going to affect that 90% test. So in order to ameliorate that and to mitigate that and give you a lot more flexibility, what we recommend is doing a two-tiered structure where you have a QOF that drops its cash directly into a QOZB. And that could be either one QOZB or numerous QOZBs. And we typically would say set up an individual QOZB for each individual deal or property that you're going to do. So that way you bifurcate liability across those. It also makes it easier from a books and records standpoint to say, okay, this is what this deal did, this is what this deal did, and this is how the numbers ended up shaking out on that. So at the QOZB level, you've got a 70% asset test, right? And if you have a 31-month plan, your cash that you've taken in does not count towards that calculation. It's not going to count against you. It's also not going to count against you as non-qualified financial property. And so that's one of the reasons why we recommend that you have this two-tiered program, so that you can avail yourself of that 31 or 62. It's a little bit complicated about what you have to do in order to get 62 months, but effectively, if your project's going to take longer than 31 months, we'll set it up so that you have 2 tranches of equity that come in, and that'll get you that 62-month window to be able to deploy your capital. You still have the 5% non-qualified financial property rule. So what you don't want to do is have a drop-down entity underneath the QOZB that is like a partnership, right, where you own a portion of that entity. Because if so, that's going to be considered non-qualified financial property. And so instead, what you would want to do is have that be owned by a wholly owned, single purpose and single member LLC that's directly owned by the QOZB. And if that's the case, then you can have a drop-down entity underneath it. Let's go to the next slide. All right, so what has to happen in order to set up your QOF and your QOZB? So your articles and operating agreements got to have the TCJA language, right? So you got to have the restrictions in there that are going to say that you're investing into opportunity zones. Same thing with your QOZB, right? Your offering documentation, you need to have something that shows your flow of funds, both from the individual taxpayer into the QOF and then down into your QOZB. You need to have, especially if you have a two-tiered structure, a 31-month or 62-month business plan for deploying capital, right? That's going to give you your working capital safe harbor. And then you're going to want a compliance resolution at both the QOF and the QOZB level that says that you're going to comply with all of the TCJA rules. And that's going to be the basis for how you build out your audit trail. And what our compliance resolution does is it references a checklist and a spreadsheet that calculates that out. And the interesting thing about this is if you're starting a QOZB, you don't actually have to do anything until you take money. Similarly with a QOF, you don't actually have to do anything or make any filings until you've actually taken in that first dollar of capital gains. Next slide, Jimmy. So it's kind of a similar process for somebody that wants to convert to a QOZB, right? That's an existing entity. So this could be somebody that's got a business that's outside of a zone that wants to move into a zone. This could be a business that's located in a zone and you want to make yourself eligible for QOF funds. And so the conversion process is fairly simple, right? Is that you need to have your assets, you need to have property in a zone, and that could just be a lease, right? If you are just a lease, like if you're in a co-working facility, you're going to want to make sure that you have an asset in that co-working facility. And then you're going to need to modify your governing docs to make them QOZB friendly. So amend your operating agreement, your bylaws. You're going to want to do that compliance resolution, and then you're going to need to do the twice annual asset testing. But once again, only once you've received qualified opportunity fund capital gains money. And then you need when you do get that money in, you're going to want a 31-month plan for how you're going to deploy that capital. Next slide, Jimmy. All right, so let's talk compliance requirements, what you actually have to do at the QOZP level. So because you're not actually getting permission from the IRS on this, it's all about the audit trail, right? You're going to have to prove this stuff down the road potentially. And so you want to make sure you've got that audit trail tight and that you've got good documentation that shows where you've spent the money and shows how that money has been tied to a census tract that is an opportunity zone. And you're going to want to create that compliance plan in conjunction with your business plan, right? That shows how you're going to deploy that cash, right? So you're going to need to do a twice annual test and report back up to your QOF on your good assets, right? Once again, with backup documentation showing how you came to that, right? You're going to need to book your appropriate expenditures. So you're going to want a chart of accounts that dials in with this. And you're also going to want to show economic impact, right? So you're going to need to have some basis of being able to kind of demonstrate ultimately how many jobs you've created, or if you're doing a real estate deal, how many downstream jobs that's created because of the contractors and the independent contractors and all that kind of stuff that you've put to work. You know, this basis value of the property, right, to conform to the 100% improvement. So you're going to need to show how you came up with the value of the building on the front end, and then how much money and how you put that money into the building in order to get your substantial improvement test. And then we talked about the biannual calculations, right, the 70 or the 90% based upon where you are. All right, let's talk about capital raising. I saw one of the chats like saying, who's got money? So that's, I think, probably one of the main reasons why folks are on this call. And so when you are raising money for a QOF, you are offering a security. It doesn't matter if it's $1 or $100 million. When you offer a security, you have to comply with the securities laws. Otherwise, you could go to jail. Our goal is to keep you out of jail. That's all of our goals, right? Not to do that. So the best way to do that is by Regulation D, which is a blanket exemption from the 1933 Securities Act if you comply with all of the rules of Reg D. So the rules that most people file under when they're doing an opportunity fund offering is either 506B or 506C. Now 506B's got some different variations that allow you to take more than 100 investors and unaccredited investors, but you can't advertise that offering. That's the crucial difference between 506B and 506C. So what 506C allows you to do, you're capped at 100 investors, but it allows you to target investors to be able to do that. And we can talk through some strategies about if your minimum is more than what, or is less than what it's going to do to have 100 investors. We can talk through strategies on that. Regardless of the rule that you file under, you have to comply with the anti-fraud provisions of the Securities Act. And the most efficient way to do that is through a private placement memorandum. So, and Jimmy, you can pop to the next slide on this. So one of the things that we identified as part of, right, as out of the strategy calls and out of the ongoing assistance that we've been doing with the folks that we're helping is that folks need a solution for how they can get to capital and how they can streamline that process as much as possible so that way they've got a guide effectively navigating that, or a general contractor, if you will, that's helping them build that house. And so that's the whole point of this presentation today, is to walk you through how we're trying to help you to do that. So as part of that, right, so as part of that process of performing an offering, you need to start with your pro forma and pitch deck. And I kind of alluded to some of the essentials that need to be in that at the start of the presentation, right? Executive summary, what the returns are going to be. And you need like a base disclosure in that document that says that this is not the offering, and it's going to be followed up by a private placement memorandum. With that pro forma and pitch deck and with that disclosure, you can utilize that to start targeting like friends and family and people that you know. And this allows you to kind of get a head start and get feedback on your offering to make sure that it's actually going to fly, right? To make sure that your terms and your promote and that kind of thing are structured in a way that's going to be conducive to people wanting to place money with you. So once you kind of have that, And kind of contemporaneously, as you're going through that, right? And you are then going to be drafting your private placement memorandum and the subscription agreement that basically provides the mechanism by how your investors subscribe to your offering. So as you're doing that, in parallel with drafting that private placement memorandum, you're going to want to be actively putting together all your marketing materials and going to market with your deal, right? You're going to be wanting to get this out in front of prospects, potential investors, and that kind of thing, so that you can get interest, so that ultimately if they have interest, you can bounce them the PPM and the subscription agreement in order to coordinate their closing. Now, that's a whole nother conversation, and not one that we have time for today, but there is an art to coordinating that closing. Because it's a 506c offering, there's a fair amount of certification that your investors are going to have to do that you're going to want to assist them with in order to make it as painless as possible. Once again, it goes back into that kind of croc brain thing of where the crocodile brain to say, hey, we're going to help you with this. So don't be scared of, this big burly PPM and this subscription agreement. We're going to help you process through that. And that's part of what, we're going to assist you in doing, is coming up with how you actually do that. So as Jeffrey is going to talk to you about, your marketing materials, website, and video are crucial to this process. It's crucial to getting the right information with a common theme and with a common approach out in the hands of your prospective investors. And I'm going to let Jeffrey walk through that when he gets that done, because that process and all of that communication is part of your brand, right? It's part of what you're communicating to your investors, and that's going to provide that kind of seamless closing process to getting your investors in and their money into the fund. So, we also recommend that you look at possibly using either a custodian or a fund administrator to provide a portal to your investors. Not only will you be able to utilize that to communicate with them, but it also allows them to collect the money and the documentation as part of your closing process. It gives your investors kind of that extra level of security and that extra level of comfort to say, okay, these guys are legit. They're using somebody that I've heard of. I know these people. I can prove them out, right? And it's another way for you to be able to prove out your infrastructure because you partnered with somebody who knows what they do. So as part of our commitment to sophisticated simplification, once again, I'm going to say that 3 times fast and Jimmy's going to laugh. We're continuing to hone our process, and we've partnered up with the folks at Crowdcreate, and I'm going to let Jeffrey walk through here and tell you all of the great things that they're doing, which we will run in a parallel path as we do this process and as we kind of go forward on this.
Yeah, thanks, Ashley. That was great. Before I turn it over to Jeff, I'm going to let you share your screen here in a minute. Actually, you can start sharing your screen now if you want to. But just before I officially turn it over to Jeff, I just want to remind everybody that we've got a lot of questions in the chat, which is great. A lot of people asking if this is being recorded and if they're going to get copies of the slides. So yes, to both of those questions, this is being recorded, and we'll email you the link to view the recording at a later date. We'll get that email out to you either later today or tomorrow. And then, yes, we're going to make the slides available as well. So we'll email those to you when we get that recording link to you. And then one other thing, we've got a lot of great questions in the Q&A and a few more in the chat that I'm going to kind of corral here, and I'll pose them to Jeff and Ashley at the end of the session today. So Jeffrey, if you can speak on your process for about 20 to 25 minutes, that'll leave some time at the end here. That'd be great.
Sounds good. Thanks, Jimmy. Thanks, Ashley. Let me go ahead and start sharing my screen. And so I am Jeffrey. I'm one of the co-founders here at Crowdcreate. We are a marketing agency that specializes in helping companies raise funds. And so how did we do it? Marketing is always changing. What we first started out doing, and even what you're going to be doing the first month, is going to be different than the next month. As you know, currently we're in the lockdown situation, and even your marketing message and the way you reach out to people today differs from when, a year ago. And so really the goal of this webinar is to give you our blueprint and our framework that we've learned so that you can have an unfair advantage when you're marketing against some of your competitors or other people in your niche, and really how to leverage digital marketing. So this is our track record, right? And why this is important is because we've operated in multiple categories and industries, not just real estate, but blockchain, startups, digital cameras, hemp, gaming, various technology sites, and the potential with opportunity zone businesses is that, right, you can start a business that isn't just in real estate, but also these different categories. And also why this is important is that we understand that there's certain macro trends and psychology for people that they need to get past before they invest in your deal. And while success, looks like a straight line, really, this is what it looks like for us and for any fund. And we're going to give you, a lot of the strategies so that you can save time, save a lot of money, do it quickly and affordably. So again, we focus in, different categories. We've worked with Shark Tank funded companies. We've worked with technology-backed startups, mobile home park funds, family offices, and different just tech products that you'd find in your everyday household, right? Whether a bootstrap company or a billion-dollar brand, really, you can apply a lot of these marketing strategies. If you'd like to see some of our past projects, they're available on our website. Again, we worked with Amazon's largest electronic seller. They're called Anchor, did their battery packs, digital cameras, health and wellness companies. At the end of the day, our vision and mission here at the company is helping people launch successful companies and funds to raise the capital that they need to grow and sustain. So other case studies in depth, you can access them via the website. If I run through this really quickly, some of these concepts will be repeat for others, and I'm going to share some more advanced strategies. So this is our growth marketing formula. Okay, this works across all of these different categories. However, you must formulate it to your target market, and we're going to show you exactly how we do that. Number one is strategy. Planning and strategy is everything before you start creating any content and going out there. And so really what we do is, we're going to sit down with Jimmy, Ashley, and really craft, what your goals are, what you should be doing to achieve them. And then from there, we're going to start creating content, your website, your pitch deck, your videos, your blogs, thought leadership, going to conferences and whatnot. And all that in mind is to educate and have you as a thought leader in your industry and your niche, is because investors need to trust you, right? And how do they trust you? It's by really showing up. It's by answering frequently asked questions. One of the fastest ways to grow that we've seen is through influencers, is actually leveraging their existing followings and really piggybacking off of the trust that they've built up with their audience, and really collaborate together to work with them. Once you have all of this set up in terms of a base framework, then you want to start reaching out to investors. And we've seen it far too often that people start pitching investors right out the bat without a proper pitch deck, without a proper website or marketing material, where truly your conversions and your access to capital isn't going to be as successful if you just built this in the initial framework from the beginning. And lastly, search engine optimization, make it very easy for potential investors to find you. So in terms of building a marketing strategy, pay very close attention to your competitors. They're spending hundreds of thousands to millions of dollars on marketing. I really want to use this, Opportunity Zone Fund, and it's very well done. His name is Ty Lopez, very famous internet marketer. He spends $100 million plus on YouTube ads. You can find a link to his Opportunity Zone Fund that he created here. And in terms of what we do as a company, we create you the roadmap on what you should be doing first, almost time frames and deliverables on when to do that, and also to execute it and hold yourself accountable to grow and scale your business, right? Visit all of their websites, look at their pitch decks, watch all of their videos, subscribe to their email newsletters, see what PR and influencers they're working with, and also look at their SEO strategy. So with all of this said, it's really to create what they call a marketing funnel. At the top of the funnel is getting awareness, whether it's your friends, your families, or you being a speaker at a conference. And then they start, getting interested in what you're doing. They're going to look at your marketing materials, your pitch decks. They're going to evaluate it. They're probably going to have a next call with you. And then they're going to really, ask for the docs, the PPM, and start signing over their investments. And ultimately, you want to turn these investors at the end of it also into a referral source. Get testimonials from them. Share those testimonials. And really, that's how you create the momentum for marketing your brand. So as we said, we're a data-driven company. We've created hundreds of websites, looked at the analytics of thousands of websites, and this is what they call a heat map. And so basically, did you know that 75% of people really don't scroll further down than what you see on the initial above the fold? And so in terms of you having your opportunity zone fund, what you want to have in this top section is what you do, your biggest differentiator, and also a 2 to 3 minute short video explainer. Show some of your accolades and social proof. Maybe if you're featured in a Forbes publication, or maybe you've worked with, or maybe you have a portfolio, of $100 million in assets or more. Explain why this is important to them. Ashley did a great job. Opportunity zone funds are a great way to defer, reduce, and eliminate capital gains. And a brief introduction to that. Highlight your portfolio, some testimonials from other investors, and lastly, have a call to action, which is get on a call or request some of the fund documents. So we really call this the key elements and the anatomy of a perfectly built opportunity zone fund website, right? We follow a lot of digital marketing thought leaders. Neil Patel, this is from his blog. He's a great resource. Great looking headline, secondary headline, call to action, testimonial. Some of the best opportunity websites are going to be below. Again, follow what the leaders are doing, know what works. If you are looking to do it quickly and affordably, at least get out your version 1 as soon as possible and follow these frameworks and templates. So Jimmy runs the Opportunity DB. He has a listing of almost a majority of Opportunity Zone Fund websites that are out there. We at Crowdcreate went through almost 200 plus websites, and these are the 4 best that we've seen. And you can see that they follow really that same format, right? Origin Investments over here is on the left, very short, concise marketing message at the top. Lifestyle pictures showing the team, showing what makes them different, their track record. In the middle here, we have CIM, what they do differently, their track record, how much they've raised, their social impact. Opportunity zone funds are really, intended to do good in the world. And we love that about what CIM's doing and other operators. And you want to proudly show that it's not just making money, but it's really, making a positive difference in these communities. Leadership, right? Here's Crescent and also Sortis. Sortis runs multiple real estate funds, and Opportunity Zone Funds is just one of them. So whether Opportunity Zone Funds, are your main business, or if it's just an ancillary part, you want to showcase that and not take away from the overall marketing message. Again, portfolio is very important. What we've noticed is that the second most trafficked page on your website is actually your team page. So before people even want to take a meeting with you, they are going to Google you. They're going to look up your team, and you want to be on the other side of that search bar to have good marketing material and collateral so that they can start trusting you. They can know that you are going to be a good steward of their capital. And so, we've gone through a lot of the Google Analytics behind that. In terms of creative branding, right, you want to establish that from the beginning, exactly what your messaging is, what your vision is, show pictures of the team, right, create a video, show your track record, what makes you different, make it very easy for them to get this information. If you send them over a 4 or 10 page PDF, you typically on that initial impression, keep it short and concise as possible. Now, Ashley, does a great job in terms of creating that pitch deck. This is a brand guidelines deck that we've created. And really your goal is to get this out as quickly as possible to start raising capital. And when you are working with influencers, right, you want to make sure that your vision is clearly stated, some of the look and feel, so that when they amplify your marketing message, things are, exactly how you wanted it from the start, and things don't kind of get lost in translation. So keep your branding consistent, and a brand guidelines deck and pitch deck will do that. When you become a thought leader, right, that's our goal. Take an education first approach that draws investors in rather than pitching them. So what does that mean? It's creating a list of, article pieces and thought leadership, answer questions, be of value to other people. And what you do in person, also scale it digitally. We're at a time now where conferences are being, canceled, but really one of our favorite ways to get exposure is actually to speak at conferences. And you can see some of the panelists here. And why do you want to speak at conferences? Is because you want to be at the front of the room and you want to be known as a thought leader. I actually saw Josh Childress in this chat here. Phenomenal guy. He's actually a former NBA player and great resource. He does a really good job of talking to other people. You have Lance Bass here at InSync, right? Another thought leader, former NFL star here. And you can see just The goal is to attend these conferences, speak as much as possible, provide as much value, and you'll notice that people are going to want to talk to you after and really, love the content that you're creating for them. So again, we've attended, hundreds of conferences around the world, and we always take picture with really who the thought leaders are. This is the co-founder of Wikipedia. This is the head of JP Morgan's blockchain initiative. Tim Draper, very famous blockchain investor and enthusiast. And again, these are just other influencers, and social proof is everything, and a picture is worth 1,000 words. These are a list of different conferences that you can attend in your industry, whether you're doing real estate, or startups, technology, blockchain, cannabis, and everything in between. Really attend these conferences because they are where the thought leaders, investors, and experts go. And they did a lot of the heavy lifting and the work in terms of getting those people in the room. Now it's your job to connect and network with them. So again, these are the movers and the shakers. Get connected with these influential people because they can also open up their social circle in terms of influence with people that you want to get connected to and who are your ideal investors. So this is exactly how we do it. We create what's called the outreach master list. So first name, last name, email address, their website, the name of their podcast. Even before this, we mentioned that that Jimmy was actually on this list because he's a thought leader. He creates a lot of good content, and just people are naturally drawn to what he does. And then from here, we get to know them, and then we have video calls with each of these thought leaders and these influencers. This is my co-founder Ivan here, who's actually doing an interview in Chinese because there's a lot of different demographics and ethnicities that you want to tap into for capital, and don't just limit it, just to your specific states or a certain region. And so how we do that, the first email is an introduction. Second email is an offer to create content together. Know your metrics and conversion rates before you start doing paid sponsorships. And we use a tool called Listen Notes to find the top thought leaders and podcasters that are out there. So when you do become a thought leader, this is one of our clients, Ploris. I actually want to play just a couple seconds of the video and show you exactly how we created this. So it's a 2.5-minute sizzle reel video. And so you can see that we actually attended different conferences with, his name's Rob Ploris.
Over 5,000 loans and $1 billion in origination between myself and the other two principals of our careers, boys, and the Tikkun Olam in all of our transactions.
So this 2.5-minute video is going to save you hours of just constantly repeating yourself in terms of what you do, what makes you different, right? Answer these questions. This is actually a 25-point framework that we do. We sit down with you to create content, right? We tell you, what it is that you should be wearing that fits your lifestyle and really vision. We have these short questions that you should answer. We have these long questions that you should answer, some topics that you should answer in terms of search engine optimization. And we sit down with you, and it doesn't, in terms of creating content, we know that everybody's busy, but you can create all of this content in a single day in terms of that sit down. Here's some behind the scenes. We still are creating content. We come with N95 masks, practice safe social distancing. You can see here the Google Drive where we attended the Benzinga conference with him. We visited all the property tours with him. We took pictures with the CNBC host, Tim Seymour here. And that's exactly how we do it in terms of creating video content. Now, so when you take all this video content, take an education first approach. Origin Investments does this really well. They talk about topics that investors want to know. What is annualized IRR? What's cash on cash return? Talking about asset management fee, talking about REITs versus S&P 500, showing us a tour of the properties that you currently manage. And you can see that, and everyone's busy, but you could get this all done in a single day in terms of the in-office segments. And we sit down with you for just 6 hours and ask you all those questions. And you have a lot of content for your audience. Again, this goes back to that sales and marketing funnel where, you want to get discovered. You want to have people, when they are in this evaluation stage, they're going to look at what you've done. They want to make sure that they can trust you and kind of, go from there. So lastly, it's really, now's the time to reach out to investors, create a list of your ideal investors, research their LinkedIn, attend conferences, join groups. We recommend the best places in person And despite right now, a lot of these conferences aren't going on, you can do things virtually still. And it is a numbers game. You're going to be talking to hundreds of people, and just to get, a couple to close. We have a lot of good resources on our website on how to pitch investors and ultimately, get in front of them. So some of the tips we have for reaching out to investors, obviously, number one is stay legally compliant. And that's why you work with people like Ashley. And in terms of our clients, they always have legal teams on board just to make sure that the marketing message that you create, right, it's not outright solicitation. And what we always, focus on is to stay value driven and to offer them something that they are interested. Don't try and close a deal in this first initial email. Focus more on getting the next meeting. Focus on the pain points, improving the techniques, what makes you unique. Keep it short and concise. This is what we call our perfect investor pitch email. The first one, if you're just reaching out to people in your close circle, it's just to land a first meeting. Usually the first line is always a unique acknowledgement, so you're not just blasting people out there without understanding what they're interested in investing. And the second one is a little more drawn out. Really, a lot of the deal flow investors, brokers, know a lot of them, and they like to have things short and concise. What's your IRR? What region you're targeting, and whatnot. And lastly, it's SEO, making it very easy to be found. What we use is these very advanced SEO tools. This one's called Ahrefs. You can spy on your competition. You can see what they're already ranking for. You can see where they're getting their traffic. I pulled a report here so all of you can see some of the top keywords that people are searching when it comes to opportunity zone investments. Opportunity zone investments in Illinois, California, learning about depreciation, learning about what's eligible, learning about what are the best funds that are out there. And this is a way to make it easy. And we actually know some capital raisers, and they said the vast majority of their investors come in through organic Google search. They are deploying millions of dollars by just typing in best opportunities on investments. They find your company, and we really want you to be on the other side of that search bar so you can leverage that. So this is what we do as a marketing agency. Right? We have the experience, we have the track record. That's really what makes us different, is that we specialize in helping companies raise money. We have the network already of influencers, different PR writers, right? In terms of our own, unique SEO ranking formula. There's a lot that I didn't share that we'd love to, discuss with you on a call after this. And we also have a database of other investors. We know what they want and what they're looking for. And in terms of specifics, right, we have a short 5-day onboarding so you can get, raising capital as quickly as possible, weekly reporting and 1-hour meetings. This is our leadership team. This is my co-founder and also my other colleague here, Will Walker, who does our business development, and alongside Jimmy and Ashley. We'd love to chat with you after. There's a link to all of the campaigns that we've done. And this is our website. So thanks for having me on.
That's great there. Thanks, Jeffrey. That was a lot of really great feedback that you gave there. I wanted to just take a minute to acknowledge everybody and thank everybody for attending the webinar today. We've got a few minutes left for questions, but before we get to the questions, I wanted to just kind of walk you through what your next step could be if you did want to start working with us. And we would absolutely love to do business with you guys. A lot of people on the call here, of course, are just here for some basic information, and that's fine. But there are probably some people who are ready to take the next step. Maybe they're ready to start raising money for their opportunity zone deals. Maybe they're ready to form their own opportunity zone fund. Maybe they need a little bit of both. So I want to talk about, before we get to the Q&A, what your next step is. What we typically do is we set up a 1-hour opportunity zone strategy call so you can talk one-on-one with Ashley and really pick his brain and get a lot of his expertise right into your ear. He'll answer your questions one-on-one. We've been doing these calls since we launched OZ Pros back in November, and I think we've done probably over 200 of those calls. Is that right, Ashley? We've done quite a bit of them over the last 5 or 6 months here. Starting today, we are going to offer you the chance to get on the phone with Ashley and Jeffrey at the same time. We've been able to, through some great feats of technology, sync up their calendars. And so you'll be able to pick a time directly on their calendar to go through exactly what your strategy could be in terms of all of the legal stuff that Ashley can walk you through, fund formation and compliance, your QOZB business plan, your pitch deck and PPM, getting that set up. And then Jeffrey can take you through the process of everything he just presented: fund marketing, getting your website set up, conveying your story with video, doing targeted investor outreach, and finding the funds for your deals and raising capital. So because we are all limited by time and we have a huge demand for these calls and huge demand to work with us, this is a paid call. And normally Ashley charges $450 per hour. He's an attorney, so you're gonna get big bills from him sometimes if he does your hourly stuff for you. But
not big,
not that big. I guess you're way under where the New York law firms might be. My apologies to them if any of them are on the call. We love you guys too. But we typically will actually do this call for $299. If you go to our website right now at ozpros.com, you'll see it's listed on our website at a price of $299. But we want to do something special for everyone in attendance today and really thank you for getting on with us. And we really wanted to get some excitement about doing this call with Ashley and Jeffrey. So we're going to strike that price down to just $199. The one thing I have to mention, though, is that we're only making this available for today. So today only, while you're watching this live, if you are watching this on April 29th, here's your special offer link. You can get on the phone with them, book a call for just $199. Head on over to ozpros.com/crowdcreate, and you'll see a link to the calendar right there, and you'll be able to book the day and time of your choosing and get on the phone with them. And a follow-up email will come with the number that you're able to dial into to get on the phone with them. So I'll keep this slide up for a few more minutes, but without further ado, let's get to the some of the questions here. So one of the first questions, maybe the simplest one that I found in the Q&A section, is what's a typical OZ deal size? Ashley, maybe I'll throw that one to you. What are your thoughts on that?
I mean, they're all across the board, and I mean, I think the key is looking at, all right, does the amount that I'm going to save in taxes of having to jump through all these hoops justify, how much I'm going to spend for that? And so typically you want, I mean, if you really think about it, if you're going to make more than $150,000 of gain, then you're probably going to save enough in taxes to offset the expenses of doing this. So, and then it just goes up from there.
Yeah. So we see sizes. What's a range typically that we might see?
I think that there's a lot of deals that are probably percolating right in that single asset type deal. And so they're anywhere between like $1 million to $5 million is typically, that's like on that single deal. If you get more than $5 million, you're typically doing kind of a multi-asset fund. And, so the deals that we're seeing are probably anywhere from $2 to $7 million bucks.
All right, then
that's on a QOF that's raising money.
Right. You have a lot of QOFs that are self-funded as well, though, and those come in much lower deal sizes potentially, right? Yeah.
So I mean, we set one up for somebody that had $60,000 in capital gain because they're anticipating that they're going to be able to grow that substantially. And that's one of the relevant points, right? Is that if you have your QOF set up, inside of your QOF and QOZB structure, you can 1031 and grow that thing substantially. So there's lots of things that you can do so that you can ultimately build this big, juggernaut that's going to come out tax-free at the end of 10 years.
Yeah, that's great. Actually, I was able to mark several of the questions in the Q&A. If you're able to access that, I'm not able to pull it up right now while I'm sharing this.
One is if you have a QOF set up and funded your capital gain into the QOF and bought real estate, can you now set up a QOZB, I'm assuming, subsidiary after the fact and move the qualified investment into the QOZB subsidiary? And the answer to that, unfortunately, is no, because that would be a related party transaction. So let me go kind of scroll through there. There's a question about the 62-month safe harbor versus a 31-month safe harbor. Effectively what the final regs did, and then the updates that they issued after that as well, is that you have 31 months, but if you ultimately bring in another injection of capital during those 31 months that's substantial, you can get up to a 31-month extension, up to a total of 62 months. So there's some hoops that you got to jump through for that, but it basically allows you to be able to extend it so that if your project needs more time, it can get more time. One of the other questions was...
Greg, sorry to interrupt. Correct me if I'm wrong, but I think one of the exceptions was if you are in a disaster zone or a declared disaster zone.
Yeah, that's actually separate from that extension via another tranche of capital. That was what I was going to answer next, is that President Trump declared the whole United States as a disaster zone. And so effectively, there is a built-in extension of time associated with the time that for COVID-19 as well.
Right. Yeah, that was exactly what I was going to ask you about. Yep.
Yep.
Good. We had a couple of comments on impact investing. A lot of investors, family offices in particular, are looking to place impact investments, and potentially it would be very powerful to highlight some of the social impact qualities that Opportunity Zone investing brings to your investors when you're putting together your pitch deck and your other marketing materials. I thought that was a great suggestion we got from one or two of the attendees. Ashley or Jeffrey, do you have anything to add to that in terms of impact investing and what you've seen in the marketplace?
Yeah, one of the fun highlights, they're called Rabaz Capital. And so they are co-owners of the Sacramento Kings basketball team, and they really built out that Sacramento downtown corridor. And the impact investing is that they brought in so many jobs to that city. And right, opportunity zones don't necessarily make a bad deal good, but it makes a good deal great. And so in terms of, impact investing, there's still a lot of capital flowing to some of these projects, and some of these people that have the track record towards taking, some of these communities and doing a great job to revitalizing them. There's quite a bit. And that was one of the highlights in it.
Good. Ashley, do you have anything else to add there on the impact investing front? What you've seen from some of our clients?
Yeah, I think that, the more that you can highlight it, the better off. I mean, I think that one of the other things that we're talking through, and I'm more talking through, is how you actually measure it. And so plugging people in with some folks that actually have some programs to be able to do that, to where you can actually quantify it. And we've got some great resources for that, which has been really cool to see.
And interestingly, actually, that's the subject of an episode of the Opportunity Zones podcast that's coming up here either next week or the week after. I'm speaking with Martin Mudo down in Los Angeles, and Reed Thomas from NES Financial are going to be talking about exactly that, how to measure impact. And then Jeffrey, I've got your client, the Sacramento Kings owner, on the podcast with me in a couple weeks too, and he's going to be talking about Rabaz Capital and all the work that they've been doing there, doing urban core development. So a couple of timely topics coming up there. One question we have here is, if my business leases equipment, does this qualify?
Yeah, so that's actually a fairly complicated one, Jimmy, and that would need to be explored in fairly comprehensive detail, because there are exceptions for mobile equipment that is on less than 30-day leases, but you got to be careful about that because of a couple of different caveats in the final regs. So it would be very factual specific, but yeah, you definitely can, and they position the final regs to be able to accommodate that.
Yeah, great. So by the way, we are at 2 p.m. Eastern time. So if anybody has to jump off, I just wanted to chime in there. We've got the top of the hour here. We're going to run over a little bit now to answer some more questions. Jeffrey and Ashley, if you've got time for a few more minutes here, but if anybody else has to run, we won't hold it against you. And thank you everybody for attending today. If you got to hop off, but Jeffrey and Ashley, if you want to hang out with me here for a couple more minutes, maybe we can answer a few more of these questions.
Absolutely.
Okay. So one question here, given the market downturn, are your investors more skeptical of OZ investments, or possibly when they sold, did they create capital gains and therefore might be more interested in OZ funds and investments? And I've got some thoughts on this, but Ashley and Jeffrey, if you've got some thoughts, I'd like to hear you.
I'm going to let you guys take this one. I've been talking way too much.
You have. All right.
Jimmy, if you'd love to share your insight.
I'll field this question. I've spoken with a few different fund managers over the past couple of weeks. I speak with fund managers pretty frequently when I interview them for the Opportunity Zones podcast, and I'm bouncing this exact same idea off of them. And I think right now there's a lot of uncertainty in the marketplace. In fact, Jill Homan and I spoke about this on the episode that went live this morning we spoke about specifically an article in the Wall Street Journal, an interview with Charlie Munger from last week, where he said that there's just seems to be a lot of capital waiting on the sidelines right now with some of the big investors, ultra high net worth and family offices. They're just, because this economic uncertainty and the virus itself, how deadly it is, it's all very uncertain. So I think a lot of people are just kind of playing a wait and see mode. I wouldn't necessarily say that people have become skeptical of opportunity zone investments. Although I did speak with one fund manager down in Phoenix who pulled away from $500 million worth of deals back in March, just because, again, he wasn't ready to dive into some of these deals. He wanted to pull his capital off the table and hold on the sidelines for a little bit. So I think a lot of people are in a holding pattern. You know, I don't know if I'd use the word skeptical of OZ deals, but I think the second part of your question really hits a very important issue. Absolutely, there are investors all over the country who participated in the stock market sell-off toward the end of February and beginning of March. And as everybody on this call knows, the stock market had a huge run-up for the 10 years prior to that sell-off or downturn. Those folks who pulled out of the stock market at that point have to be sitting on massive capital gains in many cases. And whether or not they're aware of opportunity zones today, it's kind of our responsibility to make those folks and the public at large more and more aware of opportunity zones. It's why I do my podcast. It's why I have my website. It's why I'm doing this webinar right now, to push this awareness out. This is a massive tax incentive once in a lifetime. It's massive for social impact. It's massive to help turn around the economy of this country, particularly in the areas that need it most. And we now see so many recognized capital gains coming onto the table here that need to get deployed within the next 180 days. So I think I'm hopeful that there's going to be a big push over the next several months as more awareness is raised about this program, that we can get a lot of those capital gains that were taken off the table and deployed into these communities that need it the most through this opportunity zone incentive. So I'm hopeful that does come to fruition. Ashley, I don't know if there's any other questions on here that piqued your interest that you wanted to get to. Otherwise, I've got a couple more I can throw at you.
Yeah, so there's actually one that's talking about the Title III relaxation and regs. So this is associated with the crowdfunding, so CF type stuff. And would it be a good option for raising funds for a seed round? And yeah, it's actually a great observation. I was actually on a call yesterday with a gentleman that's on the rules committee for the Jobs Act. And the question's going to be as to whether or not, as to when they're going to let that go into effect. So yeah, it would actually be a great option because, you know, effectively then, you know, you've got more of an ability to be able to do it in less of the PPM. Now there is some more complexities associated with crowdfunding that you would then have to deal with. And so you have to factor that into your strategy, but certainly, yeah, it could be a potential method for also raising capital.
Yep. No, absolutely. That was a good question and good answer there too. What about grants? You know, I've got a question here from somebody, and I get this question every once in a while. Are there any grants for qualified opportunity funds?
You know, I don't know of any grants that are available for funds per se. There's lots of grants that are available for entities that are helping funds facilitate. So I actually helped a group apply for an EDA grant. They were a university and are working to create a co-working concept across from campus so they can retain talent from the campus. And so they actually applied for that EDA grant. And I know that there's grants available to groups like that, right? So economic development organizations. I know that Opportunity Appalachia had a big like RFQ and that kind of thing. And I think that there's other kind of impact oriented groups that are working with the folks at the lenders for the CRA, you know, your CDFIs and that kind of thing. And so that would be a great place to kind of check. There's also, and this was actually released by the White House, was the 270 actions taken by the White House. And there's actually some really good resources inside of that kind of talk through grants and all of the available things that they put in place relative to how you can get money and access to money.
Yeah, a lot of that information is available at the White House Opportunity and Revitalization Council website, which you can find at opportunityzones.gov. Opportunityzones.gov. It's a department of HUD under the White House, and yeah, they've got a lot of great resources on there. Actually, I've got a few more questions that have just come in here over the last couple of minutes. One of them caught my eye in particular. How long does it take to get the paperwork needed for, what does it say? It says how long paperwork needed for Opportunity Zone and OZB take to create. So I think the question is how long does it take to actually create the organizing documents and form the entity for an Opportunity Zone business or Opportunity Zone fund?
If you got a simple deal, we can usually, and once again, it kind of depends on the state you're going to organize in, but we've been able to turn them around in less than 24 hours for some folks. If you're California, it's going to take a lot longer than that, or New York, because they just take forever. And
right.
in New York,
you can get the operating agreement turned around very quickly, but sometimes the bottleneck is getting the articles of organization back from the state. Is that right?
Yep. Yeah. So what we do and what our commitment is to try and get things out in 48 hours.
Yep. Yeah. We try to get them turned around in 2 business days as often as possible.
So there's another question in here about 1202 combined with a QOF.
Yep.
And I think that they're alluding to the way that you can couple in section 1202, which is the qualified small business stock exemption. And that's in case the QOF would have to invest into a corporation as its QOZB. But what that would allow it to do is if the QOF holds it for 5 years, it basically takes it from 10 years down to 5 years because you get a capital gains exemption for the sale of that stock. And so for a high growth, really accelerating company, you may want to look at, and we usually are setting them up as, Delaware C Corps for purposes of raising money.
Yep. Yeah, absolutely. I've got a question that just came in here. What do we expect to happen to Opportunity Zone legislation, regulations, possible extension if Biden wins the White House in November? I'd like to offer my thoughts on this first, if I may. I was actually really worried that Bernie was going to become the nominee and win, because I think at that point all bets are off the table. He's so far to the left that I actually would have been worried that they could have just tried their best to unwind the entire Opportunity Zones program. In fact, he was vocal about calling it a scam. And he said he would want to shut down a lot of the TCJA. Biden is much more center, and it's actually important to rewind several years back to when the Opportunity Zone program was actually first created. It was an idea out of EIG, the Economic Innovation Group, which is a bipartisan think tank. And one of their co-founders was an economic advisor to the Obama administration. That's something that a lot of people don't know, but that's Steve Glickman, is an economic advisor out of the Obama and Biden administration. So I've got to believe that Biden recognizes that, this is a program that was partially born out of the Obama administration. Now it was eventually passed under Trump and it's being administered under Trump. So a lot of times you'll hear it labeled or branded however misleadingly as a Trump program, but really it's born out of bipartisan legislation. So I'm hopeful that the Opportunity Zone program is going to be, especially now that Bernie Sanders is out of the picture, that I don't think we have anything to worry about in terms of the Opportunity Zone program being struck down. And I'm hopeful that at some point it could get extended. I know there's some groups busy working on just that. And Ashley or Jeffrey, I don't know if you had anything else to add to that, or if we should move on to the next question. And
so I kind of go back to, if you look at what, if you look at the tax legislation itself, it sunsets in 2026, right? So it, by very definition, expires. And I would think that it would, I would not want to expend political capital undoing something that is going to expire on its own, right? And then deal with the outfall of that from all of the stakeholders, you know, like the lawyers and accountants and everybody else that did something and took action in order to operate in the laws as they were, and then to undo it so that, but you know, stranger things have happened. So
yeah, no, that's a good point. It does sunset anyway, but yeah, I was worried that Sanders might accelerate that sunset. I don't know that we have to worry about that as much anymore, though. Taking off the screen share here for a second to see if we have any more questions. One good one here: if I buy land in an opportunity zone, how long can I wait to develop it?
So that a lot of that depends. So if you buy raw land, you have to have some kind of commercial venture on it. You have to make some improvement to it. And it can't just be like you put a hot dog stand on it. That's what everybody's favorite example is. Even though hot dog stands are very popular, you can't just do that. And so technically, you know, theoretically, you could have the full 62 months, right? Actually, it would probably be 31 months if you are, you know, you'd have to put some kind of capital into it within the 31 months. So, and that's 31 months from the time your QOZB gets the money. So assuming that you funded it with you know, your QOF money, then you'd have 31 months to be able to make something happen on it.
Yep, good answer. One question about sin business. Are cannabis and CBD considered a sin business under this program?
So it's not specifically delineated as a sin business, but I think the reason why they did that is because it's not legal according to federal law right now. And so I think that by very definition, because it's not legal according to federal law, the probably safest bet is that cannabis especially is probably not okay. Then you just got to have a conversation about, okay, what are you doing within the CBD industry, and is it precluded by federal law? Because you're taking advantage of a federal tax program here. And I would be very cautious about utilizing or doing something that's against federal law as the basis of the business that's doing that.
Right. So even though it may be legal in some states at the federal level, and because it's a federal program, yeah, I think you're right there, Ash. I would tread lightly with that and make sure you speak with your lawyer about that before you get set up. Question for both of you, but I think Jeffrey might be able to chime in on this one. How do you address the challenge of being a first-time fundraiser? If you're starting an opportunity zone fund and maybe it's your first time raising capital, especially how do you allay any investor fears or address their concerns or perspectives?
What we've seen, one of the questions also is, you know, what keeps OZ investors up at night? What we've seen successful first-time capital raisers do is they create a preferred structure within their fund so that the first, say, 8 or 10% goes directly to the investor, and it helps them sleep at night knowing that, right, you're working on the back end of the deal in terms of like the incentives and the economics of it. And so, yeah, you know, one of the things that we see is putting a pref in there that would pay out the investors first and foremost, and also just mitigating their risks and, you know, putting your own skin in the game, whether it's, I don't know, just personal liability and whatnot, but also just making it, that question that you answered, Jamie, in terms of, you know, are these deals still being done, you know, across from macro standpoint, real estate in general, everyone's taking a wait and see approach unless the deal is so good that they, you know, would want to deploy capital right now. And so it's just a good deal and set up the structure so that it's, you know, mitigates their fear. Right.
Ashley, anything else to add to that one?
You know, I think that a solid business plan, right? And having core solid fundamentals and ability to be able to demonstrate that, it's kind of like what Jeffrey walked through within your pitch deck. You got to be able to demonstrate that you got a team, you know what you're doing, and that you're going to be able to execute. And I think that that's probably the biggest key.
Good. Let's see, another question here in the chat window I'm going to bring up. The third set of regs states that the opportunity zone designations end in 2028. So can you continue to make new real estate investments after that date? So I think there's a little bit of confusion as to like what the deadlines actually are, what the dates are. Maybe Ashley, maybe you can kind of walk us through those dates and what the significance of 2028 is.
Yeah, so that was when that's basically when they said that kind of the designation of these things expire. And originally it was like the timing on that was wonky, and it was going to expire before the December 31st, 2026, deadline for when you could put money in. And so they corrected it in order to make it to 2028. But if you've got your money into a QOF before December 31st, 2026, you will be able to transact, in assuming that the program continues on and that there's not some fluke where they completely eliminate the legislation as a whole. You will be able to continue to transact inside of the set zones until December 31st, 2047. That's when the program times out.
Right. So what's the last date to make an investment? Is it December 31, 2026, or would it be 180 days beyond that point, and possibly 180 days beyond the March 15 of the following year?
Yeah, I actually think that it's that deadline, right? So that's when the program times, right, of when it has to roll, and then I think that you have until that period of time to recognize your gain. So it's a gain that would have been recognized during that year. And so then you've got till when your appropriate timelines. So thanks for clarifying that.
Mm-hmm.
You got until your appropriate timelines based upon how the gain was recognized, whether it was individually or in a partnership.
Right. So potentially you have until, depending on how the gain was recognized, you have until the middle of 2027, or potentially maybe even stretching into late third quarter of 2027, if I'm not mistaken.
Correct. It's basically September.
Right. Yep. Any other questions we have here that you guys have your eye on, or maybe we went through a lot of the good ones already and we could call it a day? What do you guys think?
Jimmy, if somebody's got a burning question with lots of details, let's get them on a call. Once again, we're not trying to make any money on the call. We're trying to facilitate and to be able to serve as many people as possible, but there's only so many hours in the day. So we're happy to help. We want to, our mission here is to try and get the Opportunity Zone program out there in the community and working. And so we're dedicated to that. And so we'd love to assist you with making that happen.
Yep, absolutely. Jeffrey, any final words here before we head out today?
No, that's it. And looking forward to the call. And I see Ivan asking a question. Can you share some good resources? Obviously Opportunity DB. I went on your site the other day, Jimmy, and a lot of good articles, and constantly, interviewing these thought leaders. It's the new media for me to just go on your website and learn about things as opposed to.
Oh, well, thank you. Thank you. Actually, a couple questions I do want to address here that just came through the chat before we go. I do want to get to that one, good resources where we can find most up-to-date news. Besides my website and besides Opportunity Zone's podcast, Novogradac has, I think, outstanding coverage, especially of the technical and accounting and regulatory side of the Opportunity Zone industry. Novogradac is an accounting firm. They're based in San Francisco. Their web address is novoco.com, or if you just do a Google search for Novogradac Opportunity Zones Resource Center, it'll take you there. They're updating the news, if not daily, at least weekly. They have news coming out. They also have a tremendous list of all the Opportunity Zone funds. They've done a tremendous job being on the leading edge of this. And then EIG.org, that's that organization that the think tank or economic research group that really helped spearhead the effort several years ago and actually co-created the program essentially. They have a lot of great resources on their website as well at EIG.org. Any others off the top of your head, guys? Other good resources? I think those are two of the good ones right there that I could think of. And then Ashley, a question for you now. Someone's asking, do we need to bring in an accountant to help structure?
I actually just replied to that, and I said, okay, maybe not for structuring, but that's a really good question.
It is.
And if your accountant's sharp, we can probably educate them about what they need to do. And get them up to speed with enough, information so that they can, do your chart of accounts, and they can do your, the stuff that you need to print off in order to be able to do that. if they don't feel comfortable with doing it, then we've got resources for being able to make that happen for you. But once again, a lot of it kind of depends on what your relationship is with your accountant and how sharp they are. But not necessarily for structuring, but certainly for ongoing management.
Good to know. Thanks for answering that one, Ashley. We're going to wrap it up here. You know, we've gone a little long. Thanks everybody for hanging out with us for this long. We're 22 minutes past the hour already. So obviously this is a very popular topic. You know, we were only anticipating maybe 10 or 15 minutes of questions. I think we answered questions for over half an hour here toward the end, and they keep coming in. And I'm sorry if we did not get to your specific question, but shoot us an email if you have a quick question. We're going to email all of you later today or tomorrow with links to the slide decks and the recording for this. And you can reply to that email if you have any quick questions. Otherwise, if you really want to take the time to talk with your specific needs, you want to talk to Ashley and Jeff one-on-one, I would really encourage you to get this strategy call set up, scheduled today. Again, this is normally priced at $299. We're running it for just $199 for today only at ozpros.com/crowdcreate. If you check back tomorrow, the price is going to bump up. We'd love to have you either way, of course, but the special price, just want to make clear, is only for today because we don't want to give this away for too long. So again, Jeffrey, thank you for attending with us today and presenting. Ashley, thanks as always for presenting. And thanks for all the attendees out there as well. And we'll be in touch. Thank you so much.